All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for the weekend, March 1st, 2024. Start with the hybrid swing portfolio, 30-minute charts. As usual, this is Alcoa, 30-minute chart. This blue box is the 5-day trading range. There's a high and a low. This yellow box is the 1-day trading range. This is your parabolic stop and reverse. This dashed red line is the 30-period simple moving average, the Bollinger Band mean. These red boxes are the standard risks that we take based on statistics. The orange wiggly snake in the middle is the dragon. It is the 10-period Bollinger Band, plus or minus a half. This multicolored line is the moving 10-period regression line, which we treat as price. Red dots are sells, green dots are buys. Yellow dots are places where I thought hard about taking a position and didn't, and usually regretting that. The thick black line is a 30-period moving regression line. That's the slow regression line compared to the 10, which is a fast regression line. Things that I'm looking for include when the 30-period regression line crosses the simple 30-period moving average, that usually indicates a change in direction of trend. When the 30-period regression line reverses slope, that usually suggests the beginning of the end of a trend. When price goes through the PSAR, that makes it flip. That's always an interesting turning point. When that 30 crosses the 30, that was the end of this downward trend and the beginning of the upward trend. When we notice a turning point and then a higher turning point, that gives us the Kata 2 condition, which allows us to really emphasize an entry. Oh, like that one right there yesterday, when we had a Kata 2 and the PSAR had already flipped, and we had an upward trend indicated by the PSAR. We had the Bollinger Band mean indicating an upward trend. We had the dragon indicating an upward trend. And then finally, officially, we have the RL10 making a higher trend. So that's the lowest risk entry you could possibly make in the way that we trade. And when you go to the peak of the RL10, the statistically significant peak of price, then I look over here and I see when price breaks through there, and then when that little wiggle happens and it stays above, then what was once resistance has now become support. And you wouldn't be crazy if you thought about adding another position here after the market opens and is working its way higher. That wouldn't be dumb. When the long position begins to stall and you see the RL10 start to decay and roll over, then I raise my stop from the PSAR to the peak of the dragon if I'm going to exit. On this one, I'm not going to exit. Why would that be? Because the metals and mining sector was by far the strongest sector in the S&P. We are testing the previous high, and I have a reason to believe it could break through and be amazing. And on 1 unit of risk, I'm already holding 4R in a cushion, and so I can afford to give it a little more room to see what it's going to do. because I want to hold that position over the weekend. And so when it doesn't violate the PSAR, I decide in this instant to override the normal exit that I would take on an intraday position when the R10 peaks and it comes back, and I ordinarily get out at the skin of the dragon. Is that a good decision to make? It's a great decision to make because it would be a decision that allows me to cash a 4-hour win and have no over the weekend risk. Why would I take the extra risk? Because the market pushed to an all-time high today. Metals and mining were the greatest sector of performance today. Alcoa was excellent. It's pushing an important resistance level. And when people see that move over the weekend, it wouldn't surprise me to see a bunch of buy orders come in and cause the market to gap higher on Monday morning. Why am I willing to take that risk? Because the reward is worth the extra 2R that I might give up by holding the position with a risk level here. That's why. Calculated risk. AI, we had the 27% gain yesterday. Today, it sold off, held support above a rising Bollinger Band mean. So you would be correct if you thought that I'm looking at the Bollinger Band mean. In fact, if there's an indicator on my screen, you can bet that I'm looking at it. This is a 1, 2, 3 entry intraday when it crosses the VWAP, the volume weighted average price. I take my standard risk. It works reasonably well for 1R, but it wasn't running away. And this time, when the market rolled over, the price rolled over, I exited the skin of the dragon for 1R. There was no compelling reason to hold that one over the weekend. Wasn't part of my plan. So I take the routine exit at the skin of the dragon. Caterpillar, and great industrial company. We had the COTA 2 entry yesterday, which closed well. Today it gapped up, broke out to a new high. There's no resistance over here. So that makes me want to hold it over the weekend. This thing rolls, comes back and holds at the VWAP and closes well. And I'm holding 1, 2, 3R on this one and 1R on that one. So I have 4R cushion, and this thing is pushing through for next week. So the industrial sector was very good. Caterpillar was great, great American company. Not afraid to hold that over the weekend when the market is at an all-time high. Cliff Natural Resources is in the metals and mining sector. It was not as strong as Alcoa. And so when it rolled over, I took that exit because it was weaker than Alcoa and was only up 0.5, even though it rallied at the end of the day after testing the low. I just take my half an R and go home. I make a decision early in the day that the symbol I want to hold over the weekend is Alcoa, same sector, but much stronger. That's comparing relative strength between two different companies. CVS, 1, 2, 3 entry after a long sell-off. I cash 1R, no overnight risk. DIA, COTA 2 entry as it breaks above the previous peak of the RL10, standard risk below the PSAR. It starts to roll over. I'm not going to hold it over the weekend. I take the exit at the skin of the dragon for 1R. Disney, COTA 2 entry goes nowhere, scratch. Devon Energy, COTA 2 entry goes nowhere, scratch at the skin of the dragon for a fraction. Well, actually, fractions, not a scratch. Big gap up and rolling hard in EEM has completely cleared the previous peak of the RL10s, is now closing the gap to get to back to this price. I buy it with the standard risk. It runs straight up, begins to stall. When the R10 rolls over, I take the exit before the end of the day at the skin of the dragon for 3R. ETHE, COTA 2 entry goes nowhere, but half an R. EWW, no trade. There was a early morning trade on Akata 2 that I just missed, and I really missed this run up. It was a span of control issue. EWZ, I took the SSC entry, standard risk. R10 rolls over, take the exit at the skin of the dragon for 1R. No trade in China. Intel, emerging dragon re-entry, exit at the skin of the dragon after the R10 rolls over for 2R. International paper, collapsing dragon entry short. It rolls over and starts recovering. I take half an R on the failure to collapse. Real estate. Kata 2 entry after a gap down and a recovery. It crossed the VWAP. That's something I'm looking at on a rising PSAR after 3 days of great performance. I speculate in with standard risk. It closes well. And in the last half hour, I get a gift of an amazing run up to a new 10-day high. So I'm holding 4R over the weekend. Coca-Cola, 1, 2, 3 entry that scratches. Regional banks, collapsing dragon that scratches. McDonald's, tried a 1, 2, 3 entry that scratches. I missed the collapsing dragon with much regret. China missed the morning move. No trade. Merck, I tried the short at the open. It sold off hard for about 20 minutes and then quickly reversed for a scratch, and I stayed out of it the rest of the day. Microsoft, on the other hand, which we had one position in on an emerging dragon entry yesterday, which closed very well, gapped down a little bit, but held the VWAP and recovered. Tech was strong. I added a second position on the recovery. It closed very well. I'm holding 6R on 2 positions. It has cleared the previous peak. It's back into its ascendance. So that's a great trade to carry over the weekend. We'll see. Marijuana, tried to 1, 2, 3 entry, had an initial run up that was good, was able to salvage a half an hour. That was wasteful. Nike, tried the collapsing dragon and drop. It recovered too fast. I stayed too long and took a half an hour. Sloppy. NVIDIA, gap and go. It breaks out well above previous R10 peaks. Speculate in with a standard risk. It explodes to the upside. The AI generation, and it's holding 5R over the weekend. That's going to look great for people looking at end of day and end of week charts. So they're going to want to buy some more on Monday, and I'm holding a nice position. Clean energy, Kata 2 entry, 1R exit. Palantir, no trade. Rivian, no trade. The S&P was extraordinarily strong and closed very well. That's why I was willing to hold things over the weekend that were also very strong during the day. Treasuries maintained their support and closed at a higher level than recently. Tesla, Kata 2, 1R. Walmart, tried the 1, 2, 3 entry. It closed very well. This feels like a strong support level, and I wouldn't be surprised next week to see it get back up here around 59.80. So I'm going to hold that one over the weekend with 2R in hand. U.S. Steel, no trade, still in a sideways quiet channel. What am I looking for on the 3-minute sniper trades of the day? Exactly the same thing, but on 3-minute charts, because all the patterns are fractal. And so we're going to take a look at real estate. This is on a 3-minute chart. Here's where it closed yesterday. Here's where it opened and then sold off hard. It closed back to here and then rolled over again when it broke below the low of the day. That's an OR3 entry. There's my risk box, playing it to the short side. check or hold. It gives me a 1-2 exit because I want to cash 2R, because why not? There's a 1-2-3 entry when it crosses the VWAP with a standard risk. Up it goes. It breaks above the previous hump of the dragon. I missed an opportunity to add a second position on the 2R battle drill. I take the standard exit when the R10 rolls over. I raise my stop to the skin of the dragon, and I exit when price comes down and hits the skin of the dragon, and I cash 1, 2, 3, 4R. So that's a 6R day on 3-minute charts on the US real estate ETF, which pays a 3% dividend if you're looking for cash. This is PBW, Clean Energy. It's one of the top 3 trading value ETFs, which it earns that distinction by a large average range percentage multiplied by as high frog quality number, which makes it number 3 on our favored list. That's a number that's updated every day on the daily report. It has a collapsing dragon entry, standard risk box. I cover for 2R on a 1-2-3 entry, or 1-2-3 exit. Then I get a PSAR flip with an SSC entry, standard risk box. It runs up. I add a second position on this one because the R10 recovered. Just following the Bollinger Band mean makes a nice, easy 1, 2, 3, 4, 5R on this one, 2R on that one, for 7R on PBW, the Clean Energy ETF. Let's find the traders today. Hamad gets caught in the grind here a little bit with advanced micro, has really no follow through today. This entry here, I think, was late. I'd like to see you get that when it crosses the VWAP. When this fails to fail, there's no reason not to get it as soon as it crosses the VWAP. Palantir, the OR3 entry paid off. This entry long was, we might have had a 1-2-3 entry, but I like that here at taking it at the VWAP. That works. This could be your short instead of waiting for this. As soon as this doesn't work and rejects the VWAP immediately, that could be short and you wouldn't lose money on that trade. And then when this doesn't work and you get the P1, there's a 1-2-3 entry here, and then that entry pays off. Be decisive. This entry short, I like. When it doesn't work, I'm getting out here at the VWAP the first time and making my entry right there, and then that should pay off. I like this short. I like exiting when it doesn't collapse at all and then crosses the VWAP. I get long at the VWAP, and then you get the exit here. Stop waiting. I like this effort. It was a sideways quiet channel. You got it. It didn't work. You exited immediately, and you didn't chase it, which is excellent because you're in the middle of a sideways quiet channel. You wait for some evidence of recovery. The first one didn't work. The second one did. Great exit, great reentry, great recovery. With any kind of follow through, this pays off a lot better in Microsoft. OR3 crushed here. This is still a great trade on this end, and it gets you back. And you don't got to be great. You just got to keep firing. Study this one. Study the entry here. This is a great entry. That's a great second, and that gives you a winning day. Kevin gets 3 out of Alcoa today. The rollover, he plays a new low of the day. That's an OR3 breakdown right there. Perfect 1, 2, 3 exit. The aggressive, that's an aggressive entry. The crossing of the VWAP is where you can improve this entry, because why not? It's crossing the VWAP, it's crossed the dragon. It's your second leg up. You've already seen a consolidation here at the Bollinger Band mean, and it did not fail. So I like crossing the VWAP and hit it right here, and then this thing smashes your way north. That's a great exit, especially after 1, 2, 3 great bars up, and then this one closes lower than the opening. That's where you get out. This is a great re-entry. This is a great short. This is a great long. So there was a ton more. Even though we pulled 3, we might have been able to pull 6 out of that. Slightly break even or a little better. I like this entry here at the VWAP crossing. This is still a great entry here because that breaks above yesterday's high. That's your mechanical entry. So this is really good. I think it waited too long. You had 1, 2, 3 chances to break higher. It didn't. The R30 has already rolled over. We should be getting out up in here, and that little fraction over time will make a difference. This is a great stop and reverse. So is that one. This is a great short when it crosses the VWAP, which pays off. There's even more opportunities in that one than we hit. 2.3 on Mexico. Boy, I just want to scream and shout, what a great stop and reverse this is. You're crossing the Bollinger Band mean. You've crossed the dragon. You've crossed the PSAR. The R10 is rolled up. You're on the north side of the VWAP, which is rising. Hit this one for the win. This is still a great entry, and it's the mechanical entry from above yesterday's high. This is a great entry. This is a great entry. I think your exit should be here after a run up like that, and you're holding 4R, and it drifts back here for 5 bars, and the R10 is rolled over. This is hoping. That is a great exit, and you get your money back. And then you could be short here, and you could let that one drift south if you wanted. AMD, this is net 1R for Satya. He doesn't stay misaligned too long. He gets a great re-entry, perfect exit. A short was available here, which would not have lost money. A long is available here on a COTA 2 crossing the VWAP, and you're going to get a good entry here and pick your exit by any rule you want, and you make money on that one. NVIDIA nailed it, missed the, oh, okay, you had an appointment here, understood. NVIDIA for the win. DIA, perfect. Here's the OR3 short. There's a crossing of the VWAP short, but still that's 3R not to be sneezed at. There's a COTA 2. Excellent work from George here on this one after the open. COTA 2 gets paid when it retreats to the VWAP. There's a re-entry in there that you could probably hit. I don't mind a short here. You would not have lost money because it came all the way down here. That stop and reverse would have paid. Then the crossing of the VWAP would have paid. So don't neglect IYR as a directional play. This one got chased out of that one when it rolls over. There's another trade in there. on Coke that is easy to believe on the downside. So I also feel like you're short on this one. Could have been hit here when it crossed the VWAP, and then that pays off, and then there's a reentry down in here. Watch the VWAP on those 30 minutes. This is a great short. This is a good exit to get paid. And you followed the VWAP. That was good. This short, let's see, I guess scratches the reentry scratch. When you had two shots at that and it didn't work, the long side and a recovery to the Bollinger Band mean might be the thing. But I don't begrudge that one. That still looks pretty good. Go to the daily or the weekend report, I should say. All right, bullish normal, wildly overbought, market at all-time new highs. Volatility is improving, bullish strong condition. We're still slightly risk off. It's getting better, but next week has a really good chance for another burst higher because it successfully withstood about three strong challenges to the downside. On the other hand, anytime you're in the red in volatility, we got to be mindful that we're a sneeze away from a recovery here. And it's March, and guys are finding reasons to be cautious and fearful. Now it's because it's March. So there it is. Blended monthly rebalancing happened today. Here's the new holdings for the ETF 13, 22, and 32 portfolios, dominated by tech and finance on the bigger ones, and then tech, small caps in the US, so it's all US all the time. ETF 2's still at 100% exposure. Looking at the RL90, long and strong. The RL270 is extremely strong. It has a wide noise buffer right here too. You've got the Dragon strong inside here, looking good, and then the 10 and the 30 are just grinding their way northward. It's at an all-time high. We have just gone through a period of fall, so there's another summer leg very possible next week because it held off the fearful selling. You know, there was a little bit of fear-induced selling here and in here, and it shook it off and kept going. So those two little selling events introduced enough weakness to make the market go from summer to fall. But now that we're at an all-time high, we get a little bit of juice and that thing could become summer again. So the upside is still there. And prove all the professionals wrong again. Yep. The 3-day and the 9-day are just telling the same story as the regression lines. It has cleared the hump. This is long and strong. PSAR flips on the 3-day are a good indicator of where the key turning points are. It tested here for a moment and just blasted north. Up we go. The 9-day, same thing. We breached the previous long-term high after it sold off that 15%. We've been able to recover nicely on the 9-day, all-time high and going strong, and the PSAR is pointing the way north. All looks good. I mean, you can't get any better than that. So I guess that's why I'm waiting for the other shoe to drop. Here's the daily charts on the 150-day look back. The purple box is the 150. This is the 30. That's the 10. That's the 5. And that's the 1. Closing at an all-time high close. What's not to love? Where do you put your stops? If I'm a swing trader, certainly not any lower than the PSAR. Like the PSAR has been a good advisor, and then when it recovers and breaks out, that's where you get back in. And when the PSAR flipped, so the start position is well, depending on where you got in down in here, your stop locks in gains. If you wanted to be tighter, you could say the 5-day low or the skin of the dragon or the daily low. Take your pick. I can't see giving back all the way to the Bollinger Band mean though, because you would have let it get past that key previous resistance. To me, it's right here. $30-day daily bars, that's that to me, it would give back all of these gains, but it preserves all of those gains. So the PSAR, the skin of the dragon. If you said 5-day low in the spine of the dragon, I'm not offended. If you said skin of the dragon, I'm not offended. It's your money. You decide. You decide what to look at, but I just showed you what I looked at. Let's see. BMRs, blended monthly rebalancing, that is. Tech and the small caps had great weeks, great months, great 3 months, great blends. In the 22, where you add the XL series, you add tech, finance, and industrials. That's why I hold Caterpillar and Alcoa. Pretty good month for the industrial sector. Pretty good week. This is one to watch. Consumer discretionary. That's getting a boost from slow recovery of strength in Tesla and Home Depot and Apple, the 3 biggest components of consumer discretionary are those 3, not Apple, Amazon, excuse me. Tesla, Home Depot, and Amazon are in consumer discretionary because why not? Looking at the large cap symbols, American Express and Caterpillar. Oh, that's another reason to hold Caterpillar over the weekend. Because it's on a tear. Home Depot, Disney, smoke and recovery there. Intel may be coming out of the doldrums. So we're going to watch that in tech as what could be something that's going to climb the ladder, and maybe that's how it starts. Nike and United Health just can't get out of the dungeon. And Apple's just getting slaughtered. They've lost their edge completely. Here are consumer knickknacks. US extremely strong, and large cap and mid cap growth exceptionally strong. India on a tear. Japan crushing it, all-time high. Commodities and silver and gold, terrible. Globally, tech is leading the way. Inside the S&P spiders, you've got the S&P itself at 82. There's industrials and tech and finance leading the way. Staples, utilities, and energy lagging. And then the S&P representing equities at 82 is crushing everything else. Treasuries, real estate, commodities, gold, oil. Equities is the only place that's making any kind of money. That's a market classification strategy, by the way. S&P 500 growth. That's a new emerging leader because it is green and white. It was good in white, and now it's great in the green. It's a chance to exploit some new strength. And you can turbo trade that intraday. That's what you can do. Has a lot of volume. And it's above its 4-month moving average. What's losing steam? Things that are white and green, like mid-cap growth. And finance is losing some steam. Was great, now it's just good. So you should be preserving profits, watching for a resumption. You can turbo it. It's not as good as these that are making a tear that way, and it's not as good to turbo as these things that are getting obliterated, but you can turbo it. This is like a COTA 2 kind of reentry if it starts resuming. So we still watch it. And it's easy to believe that the old strength could recover and become a leader once more. So, yeah. This is all energy, commodities, precious metals, and defensive plays down here getting murdered. Looking to the daily, we've already seen those. We'll already seen that. Take a quick look at the Dow. Winners and Caterpillar, huge. Home Depot, huge goodness. Texas Instruments, good. And ExxonMobil. Only a handful of symbols trading better than 2-to-1 on the Autoframer. You have 1 5-day down in United Health. It tests out at 4.8-to-1 on the Autoframer. So that should be an alert. So RSI2 is 1. That means it's been washed out the last 2 days. And it's been just getting obliterated compared to the price changes of its peer group. The only thing remotely as bad is Boeing, which was also big percent loser today. But United Health is the deepest value play in the stack. Coke's easy to believe in at 2.5-to-1. Worth a look. In the ETFs, look at the broad-based strength of new highs. That is such a vote of confidence going into next week. We'll see. Everything is so near to its 10-day high on the ETFs that nothing tests out better than 2-to-1. That's how strong this market is. I hope the professionals are short this thing and get squeezed to death. That's what I hope. All right, here's your Autoframer, United Health, Coke, Pfizer, and Walmart. I'm always interested in Walmart and Coke. I mean, have you been there lately? Have you seen the humanity? Couple squeezes of interest. Caterpillar, a squeeze. JP Morgan, a squeeze. Disney and American Express, a squeeze. Any breakout from those is going to be massively good. Some are still dominating on both sides of the aisle. Today's strength was broad-based. Look at that. What could possibly go wrong? I like it when McDonald's, Merck, Coke are all suffering. That's value plays waiting to get picked up. It's just a matter of time. Here's our trading value list. Once again, multiplies high average range percentage times the frog quality number. So this number, 6 times the frog quality number of 2.9 gives you a trading value ratio of 17.6. And that's the best ratio out of anything in the stack, followed by Tesla, Clean Energy, Uranium, Devon Energy, Intel, Nvidia, Metals, Oil, and DuPont. Look how much average daily volume marijuana. You'd have to be on dope, right? Can't help making that one. All right, so the 30-period regression line is as straight up and strong as you could want. The steepness of that slope angle, alpha, is a full 1 standard deviation higher than average. And that the slope of that 30 over, when we look back 180 days, you can see that that slope is still pretty good. It's tentative. It could very easily get better. The percent stretch above the 200-day moving average is 1.5 sigma and getting stronger. If you look at that slope statistic of the RL30 against the last 10 years, there's only been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times in the last 10 years that it's been better than this. And all of that came out of rebounds out of COVID. But if in terms of pre-COVID, the market hasn't been this good in the last 10 years, except for this yo-yoing, oscillating price action in as a result of COVID volatility. And that's why we are mindful that even though it's as good as it's like ever been, we're mindful that it can come back down here very easily. Look at all these peaks, all came down and tested the lower limits of slope. That's when the slope actually got negative over 30 days. So yeah, it can happen fast, like it did here, fast. That was a 15% sell-off in about 30 days. But volatility's been extraordinarily quiet, and that favors the upside, proving the point once more. The RL90 Z-score slope, topping out at 3, it's hard to maintain that. The 30 is stalling a little bit. The 10 is still above +1, so there can be a little tactical recovery next week. But again, this is why that we respect the downside. And the most important thing is, where do I put my stop? And I already showed you where I put my stop. At the PSAR trail, pure and simple. Not given back. All right, that's everything for today. we'll get this published and posted. And next up will be Foundations Q&A on Sunday. The Creativity 202 cohort is filling up. This is the best price it'll ever be. It is transformational training. It starts first week of April, after the book tour project finishes. That'll be done at the end of March, and then Creativity 202 will pick up, as will the next cohort of just regular small group coaching. I am looking at preparing a program of smaller scale coaching. Like the current small group coaching is a year for $2,500. I'm mindful that maybe that's too much for you, too much time. And so I'm looking at doing an 8-week course for under 1,000 to do some, 8 weeks of intensive, or maybe it's every 2 weeks. I think we'd have eight sessions for 1,000, and then you pick the session. I'm thinking that's what I want to do. So I'm going to write something up on that this weekend and give you a chance to access some coaching at your pace, and we'll see how that goes. All right, take good care, have a good weekend, and we'll see you soon.